The first tick on the index is flat, very quiet.
The Nifty is pretty much struggling below the 18,700 handle.
Mid-caps doing really well, so those are the ones which are outperforming the benchmarks with gains of around 54 points.
Market which has now come back into the green, and maybe this is the greenest the Nifty has looked since the start. As we end this day in the reckoning for all-time highs, very close by. Yesterday's losses completely reversed. So the market was slow and steadily recovering the losses till about 2:30. Actually till 3 o'clock.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Putra. Here are the headlines for the day. A late recovery lifts Dalal Street. Sensex and Nifty end in the green. Mid-cap index ends at a record high for the 7th consecutive session. IndiGo places an order for 500 Airbus A320neo family aircraft, marks the largest ever purchase by an airline in one go. CEO tells CNBC-TV18 that the order would ensure a steady supply of aircraft till 2035, as that they have a prudent financing strategy in place. Network 18's Money Control learns that trouble is brewing between RVNL and its Russian partner that won the Vande Bharat bid for supply 120 train sets via joint bid. But number 2 bidder Titagarh with partner BHEL says their contract for 80 train sets is sealed. RVNL issues a clarification just now. HDFC AMC gains after foreign investor Aberdeen sells its near 10% stake, exiting the businesses, while HDFC inks an over 9,000 crore deal with marquee private equity investors for sale of 90% stake in HDFC Credila to meet RBI's HDFC Bank merger conditions. IIFL Securities stumbles over 14% as SEBI bars the company from onboarding new clients for 2 years. Container Corp falls in a downgrade from Kotak Equities, while Subros climbs over 20%. And here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Venugopal Gare, who's the Managing Director of Bernstein. In Big Voices, we have Peter Albers, who's the CEO of IndiGo, and Jyotiraditya Scindia, Aviation Minister of India. Straight to the day's trading action now. The Dalal Street made a smart recovery in the second half of today's trading session to end at the day's high. Nifty and Sensex ended 0.25% in the green. Mid-cap continued to outperform. The market capitalization of BSE companies rose to a record high of over 293 lakh crore rupees. Prashant Nair is here with the details. Prashant.
Well, it was a slow start. The market made the day's low earlier on in the day at about 10:30. The low, by the way, today was similar to what we saw last Thursday. But after that, 10:30 to 3 o'clock, it was a slow and steady up move. Slow. 3 o'clock onwards, between 3 and 3:30, it was almost as if the market took off on a rocket, because most of the gains that you see on the screen came in that last 30 minutes of trade. Bank Nifty, similar kind of price action, but less pronounced as compared to what we had in the Nifty. Mid-caps, small caps looked good in the morning, afternoon, and by close, they added on a bit more. Indices are up on your screen. Large caps, stocks which did well, Tata Motors, HCL Tech and HDFC Life. Insurance stocks are coming back after many years of underperformance. The broader market is where bulk of the action has been, and take a look at the kind of names which went up, and it's a really wide basket. Mazgaon Dock, HDFC AMC with a large block. Stock was really the outperformer today. Amber was up 9%. Piramal Enterprises, Jamna Auto, Shilpa Medicare, Affle. Names like Gokul Das have come back above 500. Rate gain is back above 400. These are large movers. Subex, Subros, Rolex Rings, a TVS Group company called India Nippon, Bombay Dyeing, KPI Green, which is having a fantastic month and a year so far. So no dearth of action in the broader mid and small cap part of the universe. And this is the bulk of the volume-led gains that we had. Losses coming through. It's a shorter list of volume-led losses. But Timken, there was a large block at a large discount. Stock was down. Z, Container Corporation, Max Health, IIFL and IIFL Securities on the back of Newsflow and Kalyan Jewelers were some of the prominent losers. US markets, of course, will throw up cues. They were shut overnight, but tomorrow morning we'll wake up to them. Markets here are pretty close to all-time highs. I mean, a good open can sort of push us above those levels. The story, though, I think, even though the Nifty may make new highs, remains with what's happening in the broader markets, that is mid-caps and small caps. Back to you.
Thank you, Prashant, for all those details. Let's get in some market opinion now. Venugopal Gare of Bernstein believes that momentum in the broader markets will continue. He's also positive on the defense space. Listen into what he had to say.
I think that the broader markets outside of the index stocks probably will continue to see momentum. My viewpoint is, I think the market's viewpoint primarily is very centered around how they're looking at, the top-down valuations as well. The general thinking is that, larger banks, given what our expectations of credit growth this year, the lack of room for earnings upgrades, for example, doesn't really necessarily mean earnings downgrade revisions, but essentially about lack of room for earnings upgrades and where they are on valuations. I think there's a broader thinking that perhaps they're fully valued. Defense, I've been positive on it for almost a decade. And looking at where they are currently on the valuation curve, very simplistic view, if you were to think of defense, the idea was that indigenization essentially will drive faster growth for local companies, especially the SOEs. If you were to look at 8-9% long-term growth historic from a top-line perspective for the overall defense spends on the capex side of things, now these companies are already pricing in more than double of that. Look at where they are on valuation curve. So I think the defense theme is fizzling more for me from a point of view of valuation than essentially the story itself.
Okay, that is some expert opinion coming in. Moving on to the second headline now. IndiGo placed an order for 500 Airbus A320neo family aircraft. This is the largest ever purchase by an airline in one go. The Interglobe aviation stock hit a lifetime high today. It did see some fall from the highs, but let's get in Sonia Shenoy getting us more on IndiGo's landmark order book and what the brokerages are making of it. Sonia.
Well, thanks a lot for that. The Interglobe aviation stock hit a lifetime high today. It's had a meteoric rise in the last 1 year. The stock is up 22% in 2023 so far and has gained over 57% in the last 12 months. In fact, the market cap of IndiGo has now touched 94,300 crores and is on its way to hit that 1 lakh crore mark. Now, there are enough and more reasons for the stock market to be excited. As we know, IndiGo has just signed the largest deal in the aviation history, where IndiGo will buy 500 A320 planes from Airbus. Now, with this historic deal, IndiGo's total fleet has surged to almost 1,000 planes. IndiGo has its sights set on expanding its international business with this purchase. Now, IndiGo's international operations grew at a compounded annual growth rate of 25% from 2018 to 2022. The number of international passengers rose from 2.8 million in 2018 to 8.5 million in 2022. In fact, brokerages are quite bullish on Interglobe. Citi recently raised its target price to 2,900 from 2,400. Citi says IndiGo's market share has reached the highest level at 61.4% in May after Go First sought insolvency. Morgan Stanley maintains an overweight with the target price as well at about 3,126. Now, if you map the market share growth of IndiGo in the last 5 years, it has grown from 46% 5 years ago to 61.4% in May of 2023. A large part of IndiGo's accelerated market share in recent times is due to the problems faced by competitor Go First. Go First bankruptcy and insolvency can benefit Interglobe Aviation through many ways, of course, higher market share, stronger yields in a capacity-constrained environment, and increasing leverage with global OEMs of engines and planes. Lessors may be keen to allocate some of Go First's aircraft to IndiGo, given a similar fleet type, as was done in the past with SpiceJet and Jet Airways. All in all, great run for IndiGo, and seems like there could be more to go.
We still have a lot of time to do that, and clearly IndiGo has a proven model in terms of financials. What's very important is that after numerous quarters of losses, we've turned into positive again, and clearly COVID has had its hit on IndiGo as well. Prior to COVID, IndiGo was a well-performing company financially. The last 2 quarters, and I'm sure you're very well aware of these financial numbers, the last 2 quarters were positive again. So we start to build a rebuild, if you wish, financially that part, and we still have time, plenty of time, I should say, to evaluate all options and modalities on the financing part going forward.
This latest order by one of our foremost carriers, IndiGo, order of 500 aircraft with Airbus Industry, talks of the potential of civil aviation in the country, talks of the unprecedented growth that this sector has experienced over the last 9 years, and also talks of the potential that this sector holds.
Okay, all right. Let's move on to the third headline now. RVNL slipped 3%. Money Control learns from sources that there is some trouble brewing between the firm and its Russian partner for manufacturing the Vande Bharat train. Meanwhile, RVNL issued a clarification on the report stating it as incorrect. Vivek Iyer is joining us with more details on this one. Vivek.
Well, that's right. It's a very interesting development and a very important development as far as RVNL is concerned. So what we are currently discussing is the fact that this is regards the 200 Vande Bharat train sets, that the Ministry of Railways had put up for bidding. And, this included both the manufacturing of the train sets as well as the operation as well as the maintenance part. Now, remember, RVNL, along with its Russian joint venture partner, emerged as the lowest bidder or the L1 status. And they had received an order for 120 train sets. And the size of the order was very significant at 36,000 crore, which included both the manufacturing of the train sets as well as the O&M part. Now, what Money Control reports, we've not independently verified these particular news reports. It is mentioning that RVNL and the Russian joint venture partner have decided to break up the JV. And in fact, most likely, given the fact that both of the companies have not yet signed, this particular agreement with the Ministry of Railways, it's likely that the JV partnership will fall through, and there could be a re-bidding process that could happen as far as for these 120 train sets is concerned. What is the bone of contention? Remember, RVNL had a 25% partnership initially in the JV. However, post winning or post becoming the L1 status, they requested the Russian JV partner to go ahead and get a 69% share as far as the JV was concerned, which the Russian partner did not agree to, which is why talks of the JV partnership has fallen through. Now, the other two stocks that were in focus, remember, they were the L2 bidders, both BHEL as well as Titagarh Wagons. They were the L2, they agreed to match RVNL's bid of 120 crores per train, and there was uncertainty today morning, what would happen to those 80 train sets that the L2 bidder was getting. However, Titagarh Wagons spoke to us. They told us categorically that they've gone ahead, signed and sealed the order with the Ministry of Railways, and therefore, at this point of time, they've not received any communication, and they're quite confident that that particular order win continues.
Okay, all right. An important clarification, of course, which has come in from RVNL. They are refuting any such reports and saying that the order is as it was, and they will be looking at completing it as well. The financing issues related to this will be sorted very soon. So moving on, Titagarh Rail gained over 5.5%. The company is the L2 bidder to manufacture 80 Vande Bharat train sets. Umesh Chaudhary of Titagarh Rail Systems said that they are open to bid again for a contract for the 120 train sets if the auction is reopened.
Our contract for 80 trains is signed, sealed and delivered. It is not hinging upon the going forward of the RVNL and Transmash Holding deal or not going forward. Now, hypothetically, and this is purely hypothetically, if this tender is for the Transmash Holding is cancelled, and I do not say that it will be, but I'm just saying that in case it is, and if it comes for rebidding, obviously we would be bidding in this tender again. So for the 120 Vande Bharat.
Okay, all right. That is on Titagarh Rail Systems. In more stock-specific news, Divi's Lab slipped 0.5% on a sell rating from Kotak Securities, while JB Chemicals and Krishna Medical rallied 1% on a bullish brokerage outlook. Ekta Batra joins us with all the key highlights. Ekta, tell us, what are the brokerages making of these stocks?
Well, I'll start with the Nifty stock Divi's. Kotak has written on it. They've reiterated a sell with a target price of 2,600 rupees. According to them, Divi's custom synthesis segment stays a black box. Unlike global peers in the CSM segment, there is an absence of guidance, lack of disclosures on order books, active projects, exact delivery model plus customer count. They've factored in around a 21% sales CAGR in the segment over FY23 to FY26. On these elevated estimates, the stock still stays expensive according to them. Jefferies has initiated a buy rating on JB Chemicals, target of 2680. According to them, JB is one of the fastest growing domestic pharma companies, and they expect growth to be led by the therapy dominance that they have and export growth by the contract manufacturing of lozenges. Lastly, Kim's IIFL has written on it. It is one of their preferred picks in the mid-cap hospital space. Target price 1880. A couple of key takeaways from the CEO that they hosted is that the company remains focused on expansion projects in core markets as well as newer markets. The key queries from investors is the company's ability to succeed in new markets. IIFL says the strategy of equity partnership with local doctors mitigates the expansion risk in these new markets.
Okay, all right, Ekta, thank you so much for joining us. It's time for a break now, but stay tuned. We'll be back in a bit with all the other headlines. Stay tuned. Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we are tracking for you. The fourth headline now, shares of HDFC AMC surged over 7% after Aberdeen Investment Management sold more than 2 crore shares, which is equivalent to 10.2% equity. Let's get in Nimesh, who's joining us with more details on this one.
Well, today was an action-packed day as far as blocks were concerned. I'll start with HDFC AMC first. That was a large block. Aberdeen has sold its entire 10.2% stake in HDFC AMC today via block deal. So technically, it's a clean-out trade. And in terms of buyers, I understand some domestic mutual funds and a long-only fund was a buyer in today's block deal. The stock is reacting sharply on the upside for a couple of reasons. One, the block happened in the block window, which means no slippage. And two, the block happened just at a 1% discount versus the street anticipation of a 5% discount. So that's the reason why the stock is reacting sharply on the upside. Now, a couple of things to watch for going forward. One, the FTSE is likely to increase the weight of HDFC AMC. That is likely to come as early as next week. And that would mean an inflow of close to $17 million in HDFC AMC. The second is what does MSCI does with HDFC AMC now? Remember, HDFC AMC was removed from MSCI last year in March 2022, and since then, now that the promoter holding has gone down, Aberdeen was classified as promoter, and they've sold their entire 10%, so the free float goes up. So technically, what I understand, the stock is to rally another 10% from these levels for a possible inclusion into MSCI in the August review. So that's something to track going forward. The FTSE should happen early next week, but MSCI may take more time. But the news is in HDFC AMC, Aberdeen has sold its entire 10% stake in a clean-out trade, and some large domestic funds and a long-only fund was a buyer in today's block deal. So that's HDFC AMC. The second large block was in Timken India. Even in Timken India, the parent has sold 8.2% stake via block deal. The offer was at a floor price was 3,000 rupees, but the entire deal happened close to around 3,100 rupees per share. In terms of buyer, I believe some domestic mutual funds were buyers in today's block deal. The mutual fund data is quite interesting in Timken India. They own close to 11% stake. So I believe some of the domestic existing investors would have loaded up into Timken India. The fact is the promoter holding is now going to come down from 68% to less than 60% after today's block. So Timken parent will continue to own close to 60% stake. But in today's block, the parent was a seller and some domestic mutual funds were buyer in today's block. So that's the second one. The third was KIMS. Even in KIMS, there was a block deal in the pre-open wherein I understand a large private equity investor was a seller in today's block and some domestic funds would have bought. I'm not too sure on the buyer's name, but as far as seller is concerned, the large private equity investor has sold out a large chunk in KIMS as well via block deal today.
Okay, that's just not HDFC, a whole host of stocks which are in focus on the back of block deals. Moving on to the fifth headline now. IIFL Securities tumbled over 14% after SEBI barred the company from boarding new clients for the next 2 years. Surbhi Sutaria is here with the details. Surbhi, what are you picking up?
That's right. So as you said, now SEBI has barred the company from taking on any new clients for 2 years. Now they had carried out 6 inspections between 2011 and 2017, and SEBI found that the company has failed to segregate its own funds from client funds. They have misused the credit balances in their client funds, and also IIFL has inappropriately designated the client bank accounts. On the back of this, now they have barred the company to take on any new clients for the next 2 years. Now the company is in the process of filing an appeal before SAT against this order, so we'll see where that takes us.
Okay, this is something that we'll be tracking closely. Moving on, Container Corp fell nearly 4%. Kotak Equities has downgraded the stock to a sell rating. Earlier, the brokerage firm had put out a reduced rating on the stock. Mangalam joins us with the details. Mangalam.
Well, Container Corp is lower in today's trading session. There's an interesting note which has come in from Kotak, where they've downgraded the stock. They already had a reduced rating, and now they believe that it's time for downgrade to sell. Though they've maintained their target price on the stock at around 610 rupees. That's largely because they've rolled forward the estimates from FY24 to FY25. The important part about this report is that they're sensing a zone of margin correction and uncertainty for the company. Why is it? Because they access some data from industry sources, and it suggests that the company has taken a price cut of around 8 to 9% in their key sub 20 metric ton category across its key ports from the 1st of May. In fact, they've taken a higher price cut of almost 12% in the export pricing in the Pipavav port. And this is the first such instance of meaningful pricing cuts by Container Corp over the last 5 years. And this may actually reduce the premium that Container Corp charges to its other competitors as well. And more importantly, from October 2023, there will be a change in the CMD of Concor. So that opens up the scope for accelerating cuts, or that may be the strategy of the new management, is what they are guessing. Also, the thesis is that competition coming in from peers like Gateway Rail as well as Adani Logistics will only increase the costs and pressures for Container Corp. So that means that in the near term, there could be margin uncertainty for them, and as a result of which, it's better to sell.
Okay, all right. Thank you for that, Mangalam. Automotive air conditioner manufacturer Subros rallied 20% after the central government approved a proposal for making air-conditioned cabins mandatory in trucks. Sonia Shania is here with the details. Sonia, what does it mean for the stock?
Well, the stock is up about 20%, as you rightly pointed out. And that's because all truck cabins will now have to have air conditioners in them. It will become mandatory from 2025. That's what Union Road Minister Nitin Gadkari had to say. He has approved a proposal to make air conditioners mandatory. There's a transition period of 18 months that he believes it would take for the industry to sort of go in for this upgrade. But it is a big positive because there is a cost involved as well. The additional expenditure for providing AC cabins in trucks would cost 10,000 to 20,000 rupees per truck. And the reason for making air conditioners mandatory in trucks is because the truck drivers, sometimes, the long haul truck drivers are sitting and driving trucks for 12 to 14 to even 16 hours per day. And because of the severe weather conditions, now this proposal has been approved in order to make ACs mandatory. Now, how does Subros feature in this list? It is a leading manufacturer of air conditioners for automotive applications in India. The overall market share that Subros enjoys is 15.4% in the AC market in India. However, if you break it up into segments, in the passenger car segment, Subros enjoys 18.3% market share, while the commercial vehicle segment, Subros has 11.7% market share. It's the second biggest after Denso, and hence it will, of course, be a big beneficiary of ACs becoming mandatory. That it will mean more business for Subros, and hence the stock is up 20%.
Okay, all right. That's about Subros. Moving on, the Reserve Bank of India has issued a clarification after its circular on compromise settlement with willful defaulters kicked up a storm. Ritu Singh is here with more details. Ritu, what was the controversy and how has the RBI responded to it?
Well, earlier this month, RBI had come out with a circular on compromise settlements with borrowers, which included willful defaulters and fraudulent accounts. And that was very much in the center of a storm because you had bank unions writing an open letter to RBI asking it to withdraw the circular because it was disincentivizing the good borrowers. You had political leaders like Jairam Ramesh questioning RBI's motives behind introducing such a leeway for what are clearly willful defaulters and fraudulent accounts. And now, therefore, RBI has come out with a clarification of sorts through an FAQ where it clarifies that these measures in no way dilute the penal measures that are already in place for willful defaulters and fraudulent accounts. Importantly, RBI clarifies that these are not new regulatory instructions and such practices have already been in place for at least 15 years now. All RBI is doing is tightening these provisions and ensuring more transparency. So RBI clarifies that the penal measures, which include, if you're a willful defaulter or a fraudulent account, you can't set up a new company for 5 years until you've been declassified as a willful defaulter, or you cannot avail any fresh loans while you're tagged that. You can only get a loan after 5 years of repaying the entire fraudulent account and so on. So it says all this is very much applicable when compromise settlements are reached with such borrowers. The idea behind introducing the guidelines was to just ensure that there is a recovery medium for banks because, litigation and other related delays cause erosion in the value of the asset, and therefore this provides an avenue for banks to be able to reach a settlement even when, criminal other proceedings are underway. And RBI says that there are enough safeguards in the policy to ensure there's no misuse, and the criminal proceedings anyway ensure that miscreants do not go scot-free. All this is doing is including more transparency and even, other regulated entities like cooperative banks, which earlier did not have this provision, to ensure a more meaningful recovery.
Okay, all right, Ritu. Thank you so much for joining us with those important details. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.